right, so let's see which one. So
It sent me a message to let me know that you are recording, and do I want to continue or exit or something?
okay, cool. So let's share the screen.
I can see.
Okay, so can you see the screen?
Yeah, I can see it, the charts. Yeah.
Okay, perfect. Okay. So what I want to do, so a couple of things I wanted to go over, Tony. So the first thing, so one of the first things I was thinking about is, so for right now with small accounts, it's probably a good idea to use the 10 pips and dip strategy for now.
Okay.
And basically one of the reasons why I thought about that is because it's a pretty solid strategy that can pretty much be traded in any market. But also, and when I say any market, I mean if the market's trending or if it's ranging, right? And kind of what we saw last week, I think it ranged for quite a bit. Like I feel like the market never really hit, one side or the other, like as far as trending, any big trends last week. It trended between, the 4-hour resistance and supports, but never really broke any of them. So it was a pretty big range that can be traded. And I think, but also just kind of going back to, just kind of getting into the habit of identifying high value trades, low risk, low risk, high reward, looking at that. And then trading it, down on the 15 minutes. So when we're looking at like 10 pips or so, we can do that, from the 15-minute chart and so on and so forth. Or what have you. And as you can see, like just looking like kind of back at it, like this is pretty much where, price has been ranging. Like, so you got a bit of a trend right here. So we got a bit of a trend right here, but then like the rest of the days, like not really much. And those aren't a lot of pips, if you really think about it. So let's see from here to here. And this is pretty much where it ranged for the most part. So 116 pips. And to be honest with you, if we're looking at, the 10 pip strategy for the most part, there's a lot of opportunities for that. And with those opportunities comes opportunities to scale up as well. So remember, we get really good at that, the 10 pip strategy, then, for the most part, you can always scale up, you can increase your lot size or what have you, to make more, to get more reward, but I think it gives low risk as well. Trading it like that, 10 pips on the lower time frame. And then you got more opportunities as well. And then I think, in doing that, that gives you the opportunity to get in and out of trades profit, right? So you got more opportunities there, but you can also take the opportunities when they come for the bigger trades, the bigger moves, and you're not sitting, kind of waiting the whole time. Because I think one of the big things with trading and traders is the patience part. The patience part is a huge factor, and how we trade and how we view the market and everything.
Okay, makes sense to me. I know I do. I actually, this past week I've been a whole lot better with patience, which is good. I had more wins this week, which is good. I got in more trades also, so which is even better. So the more I get in, the more I'm able to learn from my mistakes, etc. Because I know they say you can only win if you trade.
That's true.
You can only learn if you trade. So yeah, making sure I be patient, and at least if I see some place to trade, and most importantly, trying to make sure I identify the trend first, whether it's a bull or bearish market before I get in it.
Definitely. Definitely not. Absolutely. I'm glad. And I kind of noticed, you did do a bit better because, one of the things, like I was telling LC last week that, I'd rather, be patient and, when I'm sure, like she has a phrase she likes to use where she says, she was 1,000% sure on that trade. I'm like, yeah, that's the way I want all my trades to be. I want to be 1,000% sure. If I'm not 1,000% sure, then maybe I shouldn't be trading it. Like, I feel like if you got to question the trade, if this is a good trade or not, it's nothing wrong with just not trading it. Just wait for another opportunity.
Mhm. Agree.
So no, I think that's all good, man. And then so LC picked up the Lux Algo package. So just so you know, yeah, she's got the Lux Algo package now. So she gets her own signals and stuff.
Oh, okay.
Yeah, so she's set up. So all right, so yeah, we can look at a couple of things. I also want to show you how to so stop orders. So limit orders is where I want to get to. I want to show you how to do limit orders.
Mhm.
Because that's something that I'm gonna start utilizing a bit more as well, especially for those times where I don't have, because if I don't want to miss a trade, so like let's say prices get ready to hit a level that I'm already tracking. I don't think there's anything wrong with putting in a limit order, for that trade to execute. Once your limit is hit, once it's triggered, right? And what that does too is it kind of helps you out on the spreads as well. When you talk about limit orders, but they come in two flavors, and that's what I want to kind of show you today.
Yeah. So hold up. Before you do that, let's see. Can we just briefly go over like what is it, the FX? What is it called? It's basically, looking at the calendar.
Yeah,
Um,
no, I want to look at that. Yep.
yeah, just well, okay. I didn't know if you wanted to look at it, if it was on the agenda or not.
Yeah. Let's take a look at it now.
Because I think when I was looking last week, I had a slight bit of confusion as to well, just reading it. So I get that it has the dates, the times, etc. Not necessarily paying attention to the low, more so the medium to high, and it also talks about your not necessarily the pair, but the currency. So yeah, I get all that part. It's just the columns, the consensus. That's what it is. Yeah, the
Okay.
consensus or the actual. That part was just throwing me off. Okay.
Okay, good deal. No, good. So let's look at it, as it stands right here, right? And then we'll dig into it, the details of it, so you can see that part.
Yep.
So, all right, so you said you got all of this, right? So you got all of that, but it's basically this part right here, right?
That's correct.
All right, so this one just hit, let's say July. So this one just hit about 30 or so minutes ago. So basically, previously, what is this? Service NZ PSI. Let's see what this is exactly. We'll look at that in a second. But previous is just basically what the numbers were on the last report. So the last time this NZ PSI was reported, these were the numbers. All right, so that was the numbers revised from a previous value of 55.2. So that was +1. So that was a good thing. So it went up. It went up from the time that it was reported before this, but this was the previous one. Then what happens is the consensus. So as individuals were waiting for this report to come from June, right? The consensus, so they probably took a poll or something like that, where the consensus was that it was going to move down actually to 53.9. So the consensus was that it was going to be lower than what it was on the previous reporting. So that was the consensus. So basically, this is what people think it's going to be when it's reported out today. So before it got reported out at 6:30 today, people thought the numbers were going to be 53.9. That was probably the average or maybe the most popular consensus. Now, the actual is what the numbers actually were. And as you can see, it was better than expected. So the expected was 53.9. That's the consensus. That's what was expected. But the actual was 55.4, which is actually better than the previous reporting. And so with that, that gives you good news for NZD. And if it was high, then high impacting, then NZD would move in popularity.
Gotcha. Okay. I got you. So this use, I guess at that time, at that moment, they would, like say for instance, you're looking at the AUD, and it's scheduled for 448, no, in 4 hours and 48 minutes.
Yeah.
So in 4 hours and 48 minutes, when they talk about it on the news, at that point or whatever, that's when they will update the actual or somewhere around that time frame.
No, that's when they'll update the actual. So when it's reported out, it's going to update in 4 hours and 47 minutes.
Okay.
And an actual post. I don't know if you get the alerts or not, but I get the alerts, and it tells me that, you know, AUD, new home sales month over month. This is what the numbers were.
Okay. Okay.
And we know this one is high impacting. So, you know, it should be, interestingly enough. So the consensus is that it's going to be 2.3%. So that's pretty interesting.
Negative 2.3%.
Yeah.
It looks like it's increasing, I guess, because it's going from a -5 to a -2.
So let's take a look at it. Let's dig into the details a little bit. All right, so new home sales in Australia are based on poll results. Yep, derived from statewide estimates applying weights based on financial year market shares of private residence commencements. Okay, a higher than expected figure should be seen as positive or bullish for the AUD, while a lower than expected figure should be seen as a negative or bearish for the AUD. So let's look at it. So the latest release, so previous was negative 0.2%. All right, so it was a negative 1.2%. The consensus was a negative 1.1. So it was even worse than the consensus was, and the actual came out at negative 5.5%. So they're actually looking for it to continue to drop. So it looks like they're looking for a continued drop, because the consensus is negative 2.3, which yeah. So if it was plus, then that means they would be looking for a increase or, you know, a better result. But since it's a negative 2.3, that's going to be worse off than it already is. And that's pretty significant. So they're expecting a pretty big drop.
Oh, wow. Okay.
Which makes sense. That's in keeping with what's going on across the globe, period, and a lot of housing markets across the globe. You know, it is decreasing. Housing sales are going down right now, obviously because of inflation. So I know Australia's gotten hit pretty hard with inflation.
Okay. All right.
So it just means it's just this right here is just telling us that new home sales month over month has dropped. So from May to June, because these are June's numbers. So from May to June, the new home sales has dropped more than likely. Is what the consensus is right now, is that it's decreased between May and June. New home sales went down quite a bit. And that's a pretty big rate. So that's going to impact AUD for sure.
Oh, wow. Okay. Well, that makes sense. Okay.
Mm-hmm. But all good stuff to know for anybody that trades AUD, because this one is going to hit, what did it say, 4 hours and some change. So we're looking at, around 11:30, something like that. Yep. This one is going to hit them. So AUD is going to have a big move for those that trade like CAD AUD.
Right. Well, that's more like 12 o'clock.
12 o'clock, yeah.
But yeah, definitely. Okay.
All right. So while we're on the calendar, I guess we can take a look and see what's all right. So the consensus, that's not going to unemployment rate for euro. So the euro is not looking to change much there. So China, let's see, anything else high impacting? We got some medium impact coming for the dollar. 66 is the consensus.
67. Okay.
What else we got going on here? Doesn't look like any. I see anything JPY.
Yeah, nothing medium or.
Nah, nothing medium or high. So GJ tomorrow should be pretty solid. Yeah, shouldn't be. It's probably not going to be any big moves in GJ tomorrow. Yeah, so I would expect GJ to probably range tomorrow, just based off of fundamental.
Okay.
Oh, here goes some GBP, but nothing. Got medium impact right here. So Saunders speech. Okay. There's a speech. Yeah. And they put it on here because these are the things that happen where we don't know about sometimes. I'm glad it's here though. Because what happened is sometimes the market will move and you don't know why. Sometimes that's because there's a news conference that probably got called same day that wasn't expected. It wasn't scheduled. So that'll move the market as well. But it wasn't scheduled.
Okay.
So all good stuff, man. Like I said, part of a great trading plan is to make sure we consider, high impact news and stuff like that. So I think we're good tomorrow for GJ. Like I said, I think it'll probably be a range day for GJ.
All right, sounds good.
Yeah. All right. So that's fundamentals. All right. So you good there, Tony? Did I answer your questions? Address
Yes,
your
you
concerns?
did. Yep, I'm good to go.
Okay. Good deal. All right. So here. All right. So one of the things, so when recognizing great trade setups, one of the things we're gonna do. So just like probably what you did last week, keeping in mind your best trade setups. So obviously it was real choppy last week, especially towards the end of the day on Friday. Yeah, Friday was, look at this. This was all Friday.
Yeah, I saw that and I was like, yeah, I'm not getting in none of that.
Yep. Yeah, that's probably the best thing you could have done. And so I got my alert set on the 5-minute time frame. So I be trying to catch, moves like this right here. So what I try to do is get the moves, get the alerts at the key levels to get in the move a little earlier. So if I get the alert on the 5-minute time frame, then that'll get me in the move a little bit earlier. And so like you saw these right here, on the 5-minute, I probably should have gotten an alert for one of these or whatnot. But as you can see on the 15-minute, the alert came like right around here. That's based off of the sensitivity and stuff as well. But in any case, if you were just looking at it, because I don't wait for the alerts to get into a trade because I'm already watching it. So like this one right here would have been a good trade to get in when we had this doji right here. Would have been a good one to get in for this candle right here. So let's see if you would have gotten on that doji. I'm just showing you, identifying the good setups that get those 10 pips real quick and dip. Oh, there go an alert. What we're looking at, confirmation strong buy, and that's coming off of. So watch this. So we look at the 5-minute right here. So it's coming off of this candle right here. Yeah, so it's based off of this candle finishing out right here. So that's why it's giving the strong buy. So I had already gotten the signal or the alert for the buy. So it's just telling me that now, that signal is stronger now. So a strong buy is what it's giving me. All right, so that's cool. But as you can see, it's rejecting right here. So for reject, obviously it's going to range right here. So you got the 15-minute support and resistance. So again, just like I was saying, identifying the good trade setups on this 15 minutes. So one of the things we can do, so like if we saw this one right here, boom, get in, because it's at this level right here. So this is pretty much a rejection here at the level. And let's see.
Is that a rejection? That almost looked like after that doji, that don't quite look like a setup because it closed above that resistance level.
Right, but so not so like the 4-hour resistance level right here. So
Hmm.
this 4-hour resistance,
Oh,
because that's what I would
yeah,
have been tracking. Yeah. Yeah,
gotcha. I see it.
yeah,
Okay.
yeah, because that's these like when you see this one right here. So these are definitely because it's bouncing off of the 4-hour
Yeah,
resistance.
the 4 hour.
So
Yeah, yeah.
that's going to give you a bigger trade setup right there. So
Mm.
we can. So what I want to do is I want to backtrack a little bit and get everybody looking back at the 15-minute for now, especially since we can see the levels for the 4 hour. That
Yeah,
makes
'cause I
sense.
know at one point that you couldn't, nothing was even near the 4 hour support or resistance.
Yep. And that's why I see, because like you see when it came here, like it didn't even go, it retraced back. That's why I was saying it was ranging, on that 4-hour chart. But it's like, where do I put a trade in if I'm trying to trade, the 4-hour, chart? Now, if we do it, now eventually it did come, right? It came here, it touched it and rejected. So this would have been a great trade to get in on the 4-hour. So that's why I want to backtrack a bit. Let's get off of the 4-hour right now. For right now, as far as looking at it and go back looking at the 15-minute to identify the trade setups, because we can see where I'm getting at is that we can see the 4-hour. So we know that if price is rejecting off of this 4-hour resistance level, then we have an opportunity for a lot of pips is where I'm getting at. Right. But our BAU though, we're looking at, the 15-minute, where the good trade setups are coming on the 15-minute chart and those levels and these, these levels right here. So obviously this is where the 15-minute levels are right now. This will expand as volume expands and as price moves a bit. So it'll give us a bigger range for the 15-minute chart is what we're looking for here. So we'll get a bigger range. Once we get a bigger range, then we can look for some trade opportunities for the 10 pips or more. But what we want to do, again, keeping in mind, and that's where I was going with all of this is, when price does get to one of our 4-hour levels or one of our higher time frame levels, those are opportunities to get more pips. We can still do that and not have to necessarily wait for trades on the 4-hour chart, looking at the 4-hour chart and monitoring that, to see, what price is doing up there. Of course, the 4-hour chart, we always want to consider the higher time frames when we're looking at, the direction, where price is trending. So we want to make sure we identify the trends, we can look at the higher time frames. A quick thing to do, if you want to do that as well, is over here. Can you see this over here?
Yep.
All right, so a quick thing you can do without, and I think I showed you this before, but we'll just go just real quick, just to get a quick look. So if we look at the day, if we look at on the daily, so it's a buy. So the market is trending on the daily right now. It's trending bullish for the day. But then we look at it on the 4-hour. Yep, it's trending bullish, right? So what I'm saying is like, when you want to, if you want to do a quick technical analysis on the pair, we can just click on this right here, and this will tell us, like, without you having to switch time frames like that. You do it just at the click of a button, and you can stay on your 15-minute chart. All right, I'm verifying the trend. So right now the trend is bullish. Well, so I'm done. So you see what I'm saying?
Yeah.
Yeah, verifying that the trend is bullish. Cool, that's a good one. And then, still looking at, our the setups the way we've been. So what we'll do is we'll look so we can see that price is breaking this 15-minute resistance, right? So we want to see, let's see, so 4 minutes left in this candle. We want to see if price is going to close above this resistance area. So if price closes above this resistance area, that could be an opportunity for a trade setup as well. And, see if we can, take the market. Let's see if it comes back, maybe it does a retest, maybe it doesn't, but we get a close above the resistance, that may be an opportunity to get in a trade and, that's 27 pips. But remember, we're looking at, 10 pips and dip, but then you got to consider this area right here. So this could be a good 10 pip setup, possibly, if you get the close above, right, above this 15-minute resistance. So that's the break. for breakout traders to get target 10 pips, get your 10 pips and dip. You see what I'm saying? So, if the price closes, we'll see what it does above this resistance area. Opportunity for 10 pips, you get a 10 pip move and be up out of there. And then, see what price does when it gets to this 4-hour resistance level, do all of our confirmations and everything. And then we can see if price is going to reject off and see if we get signals, for buys, for sales, we can see this is a pretty wide area here. And obviously the reason for that is because what we've got, here where price has tested and retested. So I like this right here where price came out, it did the breakout and then came back and tested this area. And then you got your move. So, I mean, these are all like classic setups, you get the break, you come back for the retest. Once it retests and rejects, that's your opportunity to get in for an even bigger trade. The same thing right here, like it came back, retested again and broke it down, came back.
Oh, okay. And you know what? Usually when I would see something like that, like if it quote unquote rejects in that area, the purple area, I'll be a little hesitant because I'm unsure. But if you get the rejection, I guess that is the rejection. Yeah, it's the rejection, like I said.
Oh yeah, absolutely not.
Yeah.
Definitely. Yeah, it's definitely the rejection because even any one of these candles in here, this area is pretty big, but it was probably a little smaller at the time that all of this was happening. So you're right though. You got the rejection here, right? You got multiple rejections up here. So we knew that price wasn't going to go any further than here. So that was a good sign. So if you had put it in off of, maybe this red candle, remember I like the red candles for rejections. Then you would have been just fine. And you put your stop loss, just above it, I would have put it right here. Right. And even so that's why I want to mess around with the 15-minute chart for a little bit while we're dealing with smaller accounts. Because look at the pip count. So if you put your stop loss right there, you're talking about a 6 pip stop loss.
Yeah, like that's nothing.
Yeah.
You don't have any room you don't have any breathing room, honestly.
No, so what I'm saying, yeah. So you because we're trading on a smaller time frame, you do have breathing room. Is where I'm getting at. So you are giving yourself breathing room because remember. So let's say we got in after this rejection right here. So that's this red candle right here, right? And you decided to get in down here. What I'm saying is you put your stop loss right here, and you're looking at. You see what I'm saying? So basically you're looking at a small pip count, and we'll go from right there where you would have entered. So this, what I'm saying is this area right here is a protected area where you don't have to risk so much. That's what I'm saying. But trading on a smaller time frame, you're not risking as much, especially when we're talking about 10, just trying to win 10 pips. You don't have to risk as much. What have you. You can give yourself a little bit of breathing room. That's what we want. We want some breathing room to stay in the trade, but we don't want to hold the trades for too long, which ends up happening on the 4-hour time frame. But sometimes it's just so much going on the lower time frames that it gets a little leery. But we can identify the trade setups. That's what I'm saying. Like we can still identify the trade setups on the 4-hour. Because we have the 4-hour, it's here. We got our charts are marked up basically, so we're already tracking what's going on, on the 4-hour level. So again, if we see these things playing out right here, these are our opportunities to get in. Because if you would have got in on this trade right here, so you see the rejection right there. All right, so price, it came back, it came back a little bit. So you put your stop loss. So let's say you get this rejection right here, right? You see this candle. So you put your stop loss, a little bit higher than that, right? And you see price did come back. So let's see, price would have went against you. Let's say you went in, you got in on that one. So this was an up move, it rejected, boom, price came down here and closed right here. So from here, so you would have got in right here, right? And like I said, you put your stop loss a little bit above right there to keep you in the move a little bit. So you're looking at a 12 pip stop loss, right? Then let's see, boom. And then now remember, here's the key thing that I want everybody to remember about this one though. This is the 4-hour resistance. So we're not just targeting 10 pips here. So that's what I want to make clear. This is the 4-hour resistance. When we're looking at 4-hour higher time frames, we're targeting way more than 10 pips. So, and that's what I wanted to show. That's what I want to show. So you're looking at a 12 pip stop loss, right, on this move. Then what you do, so you put your stop loss here because you got the rejection right here, right? And let's see, a good target. So realistically, I would have targeted looking at this, and this probably wasn't created at the time. So let's say what we got going back here. You could have targeted anything, but let's just give it a number. Let's say 25 pips on the move, right? If you want to be safe, right? You don't really have nothing to go by and you want to be safe, we can just target, let's say 25 pips. We know this is a 4-hour. So we're for the most part, we feel like we're in good shape if we target 25 pips. So let's see what a 25 pip move would it look like right here. So like right around here, right? And I want to see what price did. So we came, yeah, so price, it came here and some. So we got, because it did it on this candle right here. So you would have got your 25 pips before the market made a move against you in any way.
Okay.
So on the safe side, so what I'm saying is when we do get a move from the 4-hour time frame, instead of targeting 10 pips, at the low end, you can target 25 and probably be safe for targeting 25. Now, the other thing to note is this is the 4 hours. So we get that rejection. We know that the market is going to go down pretty significantly. So this is where we can target, like 100 pips and stuff like that, and there's a good chance we'll get that. But for those that, get impatient, get worried and stuff, being in the trade because it's moving against you, it's going to move against you, right? But people don't like to see that. That makes people nervous. So what I'm saying for the people that get nervous, just target 25 pips. Target 25 pips. If you're the type of person that gets nervous, because price moves against you, target 25 pips on a move like this, and be out of it. Obviously it's going to keep going, but it's going to move against you. But if you're nervous, you get nervous about price moving against you, then just target 25 pips and be done.
I think my only concern with something like that, because I believe at the time we were still in an uptrend, it was bullish. I'll be me personally, a little concerned of how much of a move I can get out of that, even though it's a major resistance level.
So anytime, so let me show you. Let's test it out, right? So let's look at every time it came into this area. So let's look at every rejection from this area that it came and touched it, right? And let's do it. We can do an average. We can do an average because I want to show you something. I want you to see. I want you to have your confidence in placing trades on the 4 hour based off the 4 hour, right? You can definitely target, but we're gonna look at it though. So all right, so right here, right? So let's say this is our first bearish candle on this 4 hour area, right? So this is the first time it tested it, right? So let's say you got that rejection. Do you want to get in right here or do you want to get in right here?
Okay.
So so what I would do is I would say, so like we got these multiple rejections right here. So I probably would have got in on this candle right here after this rejection. And I started seeing this rejection right here. I probably would have got in.
That's the red one?
Yeah.
Okay.
So I probably would have got on this red one right here, which is a good place to get in, right? And let's see where price went before it moved against you.
Oh, you're talking about the second red one, the longer red candle?
Yeah.
Okay.
So we got roughly 40 pips before price moved against you at all. So no, we had a little bit of move. We had a little bit of move against you right here. But I just want to show you. So both of these candles, so we had both of these candles close. So with both of these closes, roughly 40 pips on those two candles. So let's see, let's do another one. So then, price came back. It tested this area again, right? So we'll get the test right here. So it came back and tested it right here. We can let's see right here. Came and went down to here. This is how far it made it. right? So 45. So let's just call it 45 pips. So that was a 45 pip move when it went and tested it again. So then price came back. So we got that move right there. So then price went back, right? Tested that area again, right there. So check it out. So then we got that rejection. I think we looked at that one, but let's see. So we got that one. So here's the move right here. So we get in. So price tested it. We got the rejection, right? So let's say where price went. Another 40 something pips. All right, so 48 pip move there. All right, so we came down, boom, price decided to come back up and test it again. All right, got the rejection once again. So check it out, boom, let's see what this move looking like. This one looks like a monster right here. 60, let's just call it, all right, 65 pip move, right? Then price decided to go back up, test it again. So we tested again. Boom, we got this candle right here. So price comes, rejection. I'm just putting it in at, with price. Boom. So we tested again. Price made a pretty big move down. So we're talking a 70 something pip move. All right, so let's call it 75. Still more than the previous. So anyway, so my point is that when you're dealing with the 4-hour areas, resistance and supports, you have a better chance of getting that 25 pip or more move.
Wow. Okay.
Yeah. That's all I wanted to show you. Like, you have a very good chance because it's the higher time frame, right? You have a chance to get, and that's why we started looking at the 4-hour, because we knew that there was opportunities to get more pip count out of it. But as you can see, this move right here. So from here, now, here's the interesting thing. What you really want to do and where you really want to be is, let's say we were able to hold, we had the patience to hold this trade, right? So if we held it from the time it first rejected, this is where you really want to be with your trading. From the time it first rejected, if we decided to hold 100 and we'll just call it 160 pip move altogether.
Okay.
So 160 pip move altogether. But let's say you settle for the 25 pips on each retest, right? So let's say you got your 25 out of this one, right? Then it came and retested again. Let's say you got, so that's 125, that's 25 pips. Let's say you did your retest on this one. So that's another 25 pips. So let's say that's a 50. So you have 50 pips, right? So far, right? So you got 250 pip wins under your belt. Then let's say you caught this one right here. This is what I'm talking about, the opportunities, right? Let's say you came and you got this one, right? So another 25 pips, right? So we have 75 pips right now, right? Then you saw another retest. You waited, you're patient, you came and got the retest again. So now we had 100 pips, so 100 pip move, 100 pips, and all this is profit because we only taking 25 pips each move, right? So that's 100 pips. Then we're gonna do it again. Market comes back, it retests again. We see it. All right, so 125 pips. So 125 pips. You left what? We said it was 165 pip move. So you leave 40. Yeah. So you leave what? A couple of pips on the table.
Yeah,
I'm fine with that.
Yeah, definitely. Where was that second one at? Because I might
right
have
here.
missed
Right here. This one right here. This one was a little tricky. So like you could skip this one, but I mean it's still a retest because remember we're looking for the retest of it.
Yeah.
Because it came back, it gave the retest and the rejection once again. Which took us into an even bigger move. Before it got pushed up. But again, that's why. Yep. So you had out of this entire move right here, you had like what 5-6 opportunities to get in, grab 25 pips and dip.
Right.
This is just, again, for those that don't want to hold, because you don't know what the market is going to do. You don't know if it's going to turn against you or not. So if you utilizing a strategy like that, where, we know this is a higher time frame, I'm only looking to get 25 pips out the move. I'm not trying to be greedy or anything like that, but I know on average, I can get 25 pips or more out of a move like this. That's the thought process, at least. When dealing with the 4 hour, at least when dealing with the 4 hour. Now the 15-minute, remember, we're only trying to target 10 pips. I'm getting up out of there. Oh, look what happened. You see? So we got the break. It closed just at it. But look, let's see. You see what I was saying? So you got the close. So you put your order in, right? And you put your stop. Look at where it came down. It came down right there. That's a tiny stop loss.
Yeah, real tiny.
Oh man, 2 pips, really? All right, so let's get off of that. But let's see. Let's see. All right, so you get it here. Did it reach 10 pips? Not quite. Almost at 10 pips. Almost at 10 pips. Yeah. So we want to see if it's going to reach 10 pips. You got a little bit over 2 minutes left in the move. See if it rejects. Let's see how it finishes. Because technically you're gonna have your stop loss down there.
Yeah, watching this seemed like the longest 2 minutes ever.
Don't it? Don't it? Now, remember, I wouldn't trade this anyway, but we do want to see where it finishes because we're looking at the concept, because it's just not enough volume, in the market. But, we just for conceptual reasons, we do want to look at it right now since it's playing out real time. Just, right now it's just not the greatest time to look at actual market movement.
Gotcha.
So just something to keep in mind.
All right, look, I get it. So what, let's see, let's see, 8 o'clock. What time do you usually start trading on the weekday?
So,
well, let me rephrase that. What is the best time to start trading on the weekday? Because I get that the New York session, I believe it starts at 8, 8 Eastern, and it's in conjunction with another time.
The London session.
Got you. So they're both going on at the same time between 8 and noon.
Yep, that's correct.
Okay. Gotcha.
And that's the best time to trade. But what I've also noticed lately is you can probably get pretty good moves during the day, like around 6 o'clock. Typically there's some pretty big moves in the market around 6 in the morning.
6 a.m.
Yeah. I've had quite a bit of success with some good moves around the 6, between 6 and 8 o'clock. Typically there's pretty decent moves. That's where you all see typically my screenshots and stuff from. It's something because I'm getting up, getting ready, to go work out, and I see opportunities. So that's why I catch a lot of those opportunities. But especially utilizing a strategy like we just discussed, 10 pips. What have you, you're more apt to get those moves between 8 and 12 though, and opportunities for those moves for sure are going to come more cyclic, between the 8 and 12 o'clock hour. All right, so we see that. All right, so
it's a long doji.
Yeah. So what that means is we're probably going to get a continuation to the downside with a doji like that. And the other thing to look at is it was more volume in it, in that candle, than the previous up candle.
Gotcha. Okay.
So there's a good likelihood that you're going to get a continuation to the downside, which, could be a good opportunity for a 10 pip trade, in and of itself. But again, because of volume, I wouldn't put a trade in right now. I don't like trading this session. Not on Mondays anyway. Or Sundays. Yeah, Sundays definitely not good to trade this session on Sundays. Just the volume isn't there, and traders haven't, a lot of traders aren't really looking at the market right now. So But now, like if this was like a Monday evening around this time, that's not a bad time. You know, Monday through Friday, you know, this time isn't a bad time to trade. You can look at some opportunities. There's definitely more volume, but you know, it's the beginning of the trading week. So, you know, this the moves can be easily manipulated too.
Gotcha. Okay.
All right, so we got a little less than 15 minutes, and you'll see this play out. Like I said, good likelihood that we're going to the downside just based off that doji and volume confirmation. So we'll see what happens here. Limit orders. So limit orders are those orders that you can put in instead of market orders, market execution. You can put those limit orders in so that you don't have to watch the market. So if we're waiting for price to come here, and typically one of the things that you want to look at as well is if you get a rejection. So one of the things to note about these areas is that, and it's any of these areas, but I'm gonna show it to you since it's bigger since we have a bigger area to work with right here. So typically if you get a rejection on the back end of this area right here, price isn't necessarily going to come back to this part of the area. So you can look when you get the retest back at this area, most of the retests are going to come at the front end of this area.
Okay.
So that's good information to know, because a lot of times, you know, you'll be waiting for if you're waiting for the retest. You know, a lot of people are going to be waiting for the retest to come back, you know, in this area. Most of the time price isn't going to come back to this area, not for a while, not this part of the area.
Right. So that would be a continuation if it does it that far up. Is that
if it comes this far out, more than likely it's going to a continuation. Then we want to start looking at the daily or what have you. But no, this, yeah, and the daily actually starts like right here. If you can see the shadow a little bit.
Oh yeah, I see the shadow.
And
okay.
that daily starts right, and that daily is a huge area, much bigger area. But just something to note though, I mean, that's why the algorithm draws it like this, so that you're in the mindset that price is going to test this area at some point, right? But a good thing to note, which is why I pointed out, is that, you know, if the initial rejection comes from here, the back end of the area, then the next retests are going to come at the front end of that area, more than likely. And that's typically what happens. And that's with any of the areas. I'm just using this one as an example because it's so big and you can see it. So like I'll show you to you here. So like you see how it rejected right here, this red candle off the back end of this area. And then when it came back and retested it on this red candle, you see how it retested off the front end.
Okay.
So that's what I was saying. So price typically on these areas, you know, when it does its retest, you know, it's either the back or the front. But if it already tested the back end of the area, when it comes back to retest it, it's going to retest it at the front end. It's not going to come as far back. So you can start looking for your trade setups, you know, towards the front end. Most of the time, so you see like this was a pretty good retest. It retested about 50% of that area. So if you got, and so here's something to note as well, right? So you got this impulse move, right? Then we got the correction. So it corrected roughly 50% or more, right? So this was a 50%, 50 to 60% correction. Then came down. When it came back, it didn't come nearly, you know, for the entire move, you know, it wasn't a 50%. It was under that 50% of the entire move. And that's basically what this is showing you. So you have a better chance typically on the first retest to get 50%, 50 to 61% of that move. And then on the subsequent retest, if price comes back to that area, you're probably not going to get that much. It's always going to be at the front end of that area, if that makes sense.
Yeah.
So what we can look at is when if and when price does come back up to this area. And one of the things I'm noticing is how price is just ranging right now. And if you look at the amount of volume that's in these moves, there's more sell volume as price, you know, continues to kind of come back up to this area. So it's a great chance that price is going to continue to reject this area. So this is the last time it touched it, and it hasn't made it quite back up here just yet, right? So as price continues to come and test this area, you can still look for opportunities for sales. So you want to look as price comes up and test this area right here. We're looking for sales for the most part, because that's pretty much what we're seeing. You know, price continue to come up, and you know, also look at this. So we would have got the 10 pips out of this one right here, Tony.
Did it do
So
one?
yeah,
It
it
did
so
it oh, it did it when we wasn't looking. Okay.
yeah. So you see, so like let's say we did get in that move, right? And we were targeting the 10 pips and we had let's say 5 pip stop loss. Yeah, it would have hit it. So it just boom. Yep, you see, it would have hit it. So that would have been a win.
Yeah, it was just above it. So I was about to say, so depending on what our stop loss was, because that's pretty small, because it went just below the line a little bit.
Right, on this red candle right here.
Real candle, yeah.
Yeah. Remember that was like 2 pips or so.
Yeah.
So like, yeah.
Yeah.
So what I would say is if we're targeting 10 pips, give yourself at least a 5 pip stop loss.
Gotcha.
Yeah, give yourself a 5 pip stop loss, and you'll be fine. So either
if you time the entry right, if you time
right,
you can give yourself a 5 pip stop loss.
Right. Exactly. Give yourself a 5 pip stop loss and be good. So you basically you're doing one. So you're doing your risk. So 1 to
1 to 2.
1 to 2. Yeah, 1 to 2.
Yeah.
So you're risking 1 to get 2, basically.
Okay.
So that's not bad. So yeah, so that would have been a win. It actually would have been a winning trade.
Yeah, definitely.
So all right, so that was a good example. All right, so back to limit orders. So yeah, so that's where you want to do like limit orders, right? So you can have a limit order sitting right here, right now, right? So you can go in and you can say, hey, I want to put a limit order in. So where is it? You know what? Let me connect my phone and let's do it off of the MetaTrader.
Oh yes, that'll be even better. Because since I'm doing my trading in MetaTrader and not this on TradingView.
Yeah, let me see if my phone is connected. All right. Give me 1 second. I'm gonna pause the sharing while I do this.
Yeah.
Okay. All right, so let me find MetaTrader.
So one of the things that I liked about that video you shared the other day, which is pretty interesting, right? How the guy, and I'm gonna have to watch it probably a couple more times, but one of the things that I honed in on, he was talking about the color of the candles. He's like, he basically was saying that the color of the candles necessarily don't matter. You just pay attention to how, the structures of the candles. And he was like, put a color on there that doesn't make the mind think, green means bullish or red means bearish. Because yeah, the structure is what's important. And because I know and sometimes I still get caught up on the colors of the candle, right? So
Mhm.
I'm sure I'm not the only one, but I thought that was a pretty interesting note.
No,
Very
I keyed in on that one as well. That was the first time I heard, that concept from, talking about psychology. I thought he did a good job at giving, relevant experience, information based off of his experience. Because this is the same thing that a lot of traders, deal with. Psychology is huge.
mhm.
I agree with you, Tony. Like that was a one that I keyed in on as well. Can you see my screen? Is it back
Yes,
up?
yeah.
Okay. All right. So market orders, limit orders. So here's what we do. So we open the chart. All right. So we can do this right here. So what you do is you go in and it's right here. So instead of market execution, let's say we were looking to do a buy limit. So here's what they mean. So limits are, you want to set a limit order when you're looking for price to come to your price point and basically reverse, right? So think of the limits as reversals and think of the stops as continuations. All right, so let me show you what that looks like. So if we were to let's put a buy limit order in. So, well, no, let's put a sell limit order in. We're gonna put a sell limit order in. So basically, we're gonna put a sell limit order in at this price point right here. So 164.693, and let's just make it 164.700, right? All right, so sell limit. All right, and you see how the price thing comes up right here. All right, so we said we're going to do it at 164.700. All right, just to round it off. So basically what we're saying is once price gets to 164.700, we want our sell order to trigger. All right, that's what we're saying. We want our sell order to trigger. And for sale. Now we put a stop loss. Let's say we're going to target right here. So this is going to be our stop loss, 164. Let's say 164.800. All right. So 164.800 is going to be our stop loss. And let's say our TP is going to be, so this is, so we're going to target, so let's say a good TP for this one. See right here, let's say 164 dot, let's say 164.400. Let's do that. All right, 164.400. All right, we're gonna execute this one. Let's see. So we're not going to put any expiration or anything like that. You can put an expiration, right? You can expire it. You can put a time for it to expire, right? So we're going to place this one. Okay. All right. So sell limit order is placed. So basically, again, what we're saying is that once price gets here, and so remember the limit orders are reversals. So we're expecting price to reverse when it gets to this area right here. So we have our order sitting here and we're saying we're going to have more supply once price gets here. So we're going to sell it. So
Okay.
sell limit. So it's a limit order and we're looking for it to sell when price gets here. So that's all you're saying. So don't get caught up necessarily on the limit part of it, more so on the sale part of it, right? Limit orders, is just all of the noise and all that stuff. It's not market execution, or what have you. Now the stops are basically, so if you think that price is going to continue in a certain direction, so let's say we think that price is going to break down this 15-minute support right here, okay? Then you will put in a sell stop order. Basically, you're saying, I want my order. I want to sell, right? I want to sell when price gets here. When price gets to this price level right here, I want to sell to go in.
I
So
think my only concern is, you know how, you talk about the candle closing. Well, you won't put it in too far in advance anyway, so never mind. Okay.
for your limit orders, you can put in anytime. You do actually put those in far in advance.
Yes. Okay. So yeah, that I think that's my only concern because like at that point, if you put that order in, you don't know if that candle closes above. Well,
So it doesn't. So these orders, these limit orders,
mhm.
it's not based off of a candle close. The limit orders are based off of price getting there.
Oh no, I get it.
Okay.
Yeah,
Okay.
yeah, I do understand that, but you typically like say for instance, if you're looking for a continuation, right? You want the candle to well, not hypothetically, but to close above an area in order for it to continue, if I'm saying that
Oh
right.
yeah. No. Absolutely. Yeah. 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 Yeah.
Yeah,
Yeah.
and
So
the
yeah.
same thing, yeah, and the same thing with the reversal. If it rejects, you want to make sure that it closed below us. Or well, yeah, well, I guess it depends on which direction it's going. So, and that's what I mean by you're putting this limit order in, and you're not knowing if that candle closed or not.
So
Uh,
limit orders are even further advanced than that. So it's not so like I mean you can put it in like if for limit orders are more so not necessarily for scalping, more
mhm.
so for
Entry.
yeah, for swing trading or yeah, entry, like if you don't want to have to watch it.
Hmm.
Um so you can't think, so you're not necessarily thinking about candle closes and stuff like that if you're doing limit orders. That those aren't even factors that you're considering, or that it doesn't factor into limit orders.
Gotcha.
Yeah, so you're not even thinking about that. Or the purpose of limit orders is just to, for you to have an order to trigger without you having to watch it,
Hmm.
when price gets to a level. So again, like we say, that's why I put it in right here. For price to get here, trigger. And like you said, you don't know if it's gonna, continue, whatever it's gonna do. What it'll do though is it'll trigger your order. That's why you want to have a pretty decent, stop loss to keep you
Hmm.
in the move.
Hmm.
But it's going to trigger your order, and either it's going to reverse or not. You don't know what it's going to do, but but that's why you analyze the market to say, okay, this is a good opportunity. So let's say we had all of this right here, right? We had these moves right here, and we knew at some point in the future price is going to come back and retest this area. Right. So let's say we got this retest right here. And we said, all right, price is going to go down. And at some time in the future, it's going to retest this area. I want to be ready for it.
Hmm.
You see? So all right. So
Well,
I
it
put
look
a
and it looked like it hit it too. So I'm guessing it would execute.
there you go. So it would execute, right? It's going to execute as soon as it hits it, and then drive down, and then
Hmm.
drive to to your target.
And all you want is it to go in the direction of your trade.
Right, right,
Right.
right, 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 right.
So yeah, on this stuff, you cannot forget to put in your stop loss.
No, you definitely want to put when you setting up, and that's why you're setting it up well in advance. There's no reason
Hmm.
why you don't set it up properly, but you
Hmm.
definitely want to set up, your stop loss, take profits, and stuff like that. That's the whole point, for you to have orders in to execute on their own, without you having to do anything. So what I would say, my advice, the reason, practice with it in demo, and see, how well you do with putting in limit orders on the
Hmm.
demo, and
Gotcha.
before you do it, live. So that was pretty much the last thing that I wanted to show you, and I'll show you again. In the future, we'll go over it again. But I would say just practice with it so you can understand it, and see what type of success you have. And again, it comes with analyzing the market properly. You're not just putting it in just to put it in, but at the same time, like you can put a buy limit order right here at this level right here, right? We don't know when price is going to come down here, but you can put a buy limit order in so that when price does come down here, you already got an order sitting there waiting.
Hmm. Hmm.
Okay, okay. No, I actually like that because one thing I don't like is when you put a trade in and you have to deal with what is it called? I
The
can't think of.
spread, the
Yes, the
spread.
spread. Yep,
Yep.
yeah. Especially like on the weekend, if you happen to put a trade either on the weekend or holiday, and those spreads are they become ridiculous.
Oh yeah, absolutely. I agree. I agree.
So yeah, okay. No, that's sweet. I think one of the things that I had to work on is trying to remember the difference between limit and stop. I wrote them down, but just talking about remembering without looking at my notes.
Yeah, gotcha. Good, good,
Yeah,
good, good, good.
so
Cool. All right, Tony. Anything else before I close everything out?
no, that's it for trading.
All right, cool, cool. Let me stop. Let me pause everything. Pause the recording.